Welcome. I'm Catherine Magana here with Rachel Ivanovich, Vince Stefano, and Greg Carroll, where we're here to provide you insights about the markets, planning, taxes, and much more. Today is April 2nd, 2026, and here we are a week later, and the markets are pretty much where they were last week, believe it or not. It's been very volatile these last few days. We've seen some major market moves. Still, the headlines that we're seeing are we still have the war, we still have discussions about how to reopen Hormuz. So there hasn't been a lot of change, although there's still been the headlines and the headline news over the last several days. But one of the things that did come up is the initial weekly jobless claims fell. It came in at 202,000 versus 215,000. So it came in, it fell, so it came in a little bit lower than expected. And interest rates, kind of looking at where we're at with that, the 1-year CD rate right now is pretty similar to where we were last week, was at 3.9%. And the 1-year Treasury is slightly down from last week. We're at about 3.81. Looking at mortgage rates, so there's been a little bit of a shift over the last several weeks. So we have seen that the 30-year and 15-year, the 30-year right now, as of this morning on Wall Street Journal, was at 6.57%, which is about 25 basis points higher than a couple weeks ago. And then the 15-year is at about 5.85%. So obviously we have seen some of the mortgage rates change a little bit. And so here we are. Once again, there's still a lot of headlines and talks, and just we haven't seen a lot of change with the markets in the last 7 days. But you wouldn't think that's the case after seeing these market movements.
Yeah, I think about a couple days ago, 2-3 days ago, Trump was kind of giving the impression that we're about done with the war, and then last night I think he pretty much said, we might have to punch him a few more times over the next couple of weeks. So I think that's what's hurting the markets today.
Well, and then you have Trump is supposed to sign an executive order to pay the DHS, which is the Department of Homeland Security. So that's obviously been a big thing over the last several weeks. And for those traveling, which I know Vince is going to be traveling soon, it sounds like the TSA lines the TSA workers are back, and that supposedly those lines aren't as crazy.
I heard from Greg, complete opposite.
Oh, really?
Yeah, this morning I had a friend drop his wife off at 10 to 5 a.m., lines out the door.
Oh, interesting.
For TSA.
Okay.
Well, that could be the East Coast flights have to get out pretty early, but I don't know. Who knows?
Yeah.
Well, it's also spring break and a lot of trips, and so. But I was hearing that it would be hours and hours. But I guess you want to make sure you plan.
Good luck, Vince.
Right?
That's Saturday, right?
It's Saturday.
All right. Well, have fun.
But Vince has a family member getting married, so we're excited for that for you. And
Well, thank you.
Well, guess what? There are 13 days left of tax season.
Oh
yay.
boy! Wow, I haven't filed mine yet.
I better do my daughter's taxes.
I'm done with the Fed and almost done with the state.
So I wanted to address just a couple of things that I've been seeing this tax season that may impact several people, but it's identity theft. And so what happens when I go to, I finalize the return and press the button, send it to the government, and it kicks back. And sometimes you don't get the kickback until, weeks later. And I received that word yesterday that someone's return had rejected, not with the Fed, but with the state. And that doesn't often happen. Usually it's the Fed that rejects it, not the state. And so what I called them yesterday, the state, and said, what's happening? And they said, well, there was identity theft. Somebody had used this person's Social Security number on a return and had already filed a return. Oh. So I thought that it was just, if this happens to you, what do you do? And then, so there are several things that you can do. Number one, you have to print out and mail your return in, but then call the credit bureaus and put a alert on your Social Security number and or freeze your credit. You can file a fraud alert with the Treasury Inspector General online. So there's definitely things to do if this happens to you.
If you do that, all your credit cards are frozen too, right? You got to get new ones.
If you do an alert, then it just alerts you if somebody's trying to make a change, which is not as restrictive as putting the freeze on it, which is what I might suggest doing versus just cutting it all off. But then the number one thing that I would do is file with the IRS, and you can do it online, and you can apply for identity protection PIN. It's a unique number that you get issued every single year, and if you're married, both you and your spouse want to get one. But I would absolutely urge everybody, you don't have to have identity theft happen to you before you apply for the number. So I think this is a really important thing to address because I'm seeing it more and more.
Wow, it's interesting. I've been using that pin last
Have you?
last 4 or 5
And
years.
you can't e-file without it, but they do
Yeah.
issue you a new one every single year.
Every year. Yeah, that's good. No, it is good. I use it.
Yeah.
Not that I'm a tax expert, but but H&R Block told me to do it.
Told
so
you
I
to
did
do it?
Yeah,
All
so I
right,
did.
there you
We
go.
talked about it on the podcast.
I wanted to talk a little bit about the new Fed regime that's going to be coming in because I think Powell just has one more meeting. Is that correct? Or as the chairman
I think so.
Oh, yeah, I think May is.
at the end of this
End of
month?
May,
I think.
right? Isn't it the end of May?
Oh, is he done in May?
I thought it was in May.
May, yeah. it's-
Okay, because there's a meeting I believe the last couple days of April.
Oh, okay.
But President Trump's been putting these people in there that will maybe lower rates, but there is a chart going around now which might make more and more headlines comparing inflation wave recently from 21, 22 when we had the big spike to the early 70s and 73 and how that came back down, 76, 77, but we had that massive spike again in 79. So it's going to be, depending on how long this war takes, price of oil and everything else that's related to that and the gas and the supply chains, the inflation might become a little stickier. And once that gets ingrained and, the Federal Reserve is, the ghosts are going to come out from 21 when they said inflation was transitory, right? And then they had to go and jack rates up, 300 basis points or whatever.
Pretty aggressive. I remember
They were
that was
ultra aggressive,
fast.
75 basis points each meeting, and that crushed the bond market down 15%. Stock market got slammed. So it's I wouldn't want to be those people on the FOMC board that are there for Trump, and if they don't lower rates, because they probably shouldn't if inflation is going up.
Well, yeah, it's interesting.
It's going to be tough.
I was looking at the probability of a rate change at the next meeting, and 97.4% of no change and a 2.6% of a rate hike.
Yeah.
So for our listeners, the FOMC is the Federal Open Market Committee.
Correct.
Yeah, and most pundits are saying that watch the Fed are thinking maybe one rate cut this year if it even happens.
Exactly.
So I mean, from where
That's gonna be late
from where
this
you
year,
were
the way-
talking,
yeah.
what 2 or 3,
Yeah.
we're now down to
Oh,
maybe
yeah.
one or
Or
a rate
none,
hike.
yeah.
Or a rate hike,
Yeah.
which again that
Yeah.
puts a lot of pressure on home sales, puts a lot of pressure on equities. But again, Fed's goal is to fight inflation. And
Correct.
You need to fight inflation
And stable employment.
Yeah.
Yeah.
And we're hoping we can get to that, but as Catherine was mentioning about the war, and I tell you, we just keep sounding like a broken record.
I know. I was
all
like,
the time. It's
what
the
else
same
do
thing.
we have to say? 'Cause
And
it's been
again,
the same the last 2 weeks.
the market wants some resolution, and
Right.
as you had mentioned earlier, if you saw this week, I think it was Monday and Tuesday, the markets just ran like scalded dogs. And I mean, it was amazing. When there was an announcement that there may be a ceasefire, and that Iran wanted to, get some kind of resolution, the market just went parabolic.
Yeah.
And it happened quickly. I mean, I kept looking around like, what just happened?
Yeah,
and all
2
of
to
a sudden,
3% up on the
Yeah.
major indices. That's big moves.
within a half hour that
Yeah.
happened.
Oh,
So
yeah.
obviously, everything is very, very news driven, as we've been saying for the last couple of podcasts. And what was real interesting when you looked at how the market got to that plus 3%, it was the large cap technology stocks that moved that market forward. And I've been saying all along, when we get into these correction modes, and I think it was last week that the NASDAQ and the S&P actually hit correction mode. I may be wrong on that, but I know the NASDAQ did, and I think the S&P may have come down 10% from its most
It was
recent
right
high.
there for
It was-
sure. Yep.
It was
Yep.
close.
Yep.
And maybe intraday it hit
Yeah.
it or something like that. But what was interesting was because of that, and I always say when you start seeing these big moves to the downside, that's when you have to look at what stocks are going to take you out of that. And we're at the 1-year anniversary of, the tariff announcements from last year, and we know what happened to the market right after that. It went down very quickly. But then it recovered quickly again, and again it was our larger cap technology growth stocks that moved the market forward. I'm not saying that that's going to be the only thing that goes up, but when big institutional managers and macro fund managers look to get invested quickly, that's where they're going to look. They're not going to scale down into the smaller cap stocks until after the big moves are made.
Because those things are all down like 20, 25, 30%.
You're talking large cap growth.
Large cap growth.
Yeah, absolutely.
So they're looking way cheaper than
their valuations,
been in years.
Right.
Yeah.
Their valuations, instead of 40 times earnings, now they're looking at 20 times earnings. So but they're growing at 40 to 50%, which is actually pretty attractive from a
And
CARP
the
standpoint.
Russell 2000, which is the small cap stocks, is actually the one that's in green the year to date. As of yesterday's close, which is March 1st, the Russell 2000, which is more of the small cap
April
stocks.
1st.
I'm sorry, April 1st. What day am I
April
on?
Fool's. That's right, April Fool's.
April 1st, 1.23%. So obviously there is some positivity out there.
And again, it's a lot of small cap energy stocks that are in the Russell 2000. But the Richmond Fed pres came out and said, you were talking about oil prices. He came out and said that he thinks oil prices are going to continue to go up, but it's only going to be a short-term event, and then there's going to be a very rapid retracement. So with that, you've got half the market pundits saying sell and go to cash, and you've got half the market pundits saying, no, use this as a great opportunity to buy. And that way, 9 months to a year from now, they've always seen the markets trend much higher. And again, as Catherine always says, it depends on your personal situation, obviously, your risk tolerance.
Well, it's too late to sell now.
Oh, you can't sell now. No, I've told anybody that's asked me, forget it. Do not sell now, if anything. In fact, I was just going to say, I think we're closer to a buying opportunity now than anything else. And if you believe what you heard Trump say last night, that the war may be over in 2 to 3 weeks, and you kind of reiterated that, in your opening monologue, you could see a very extended rally from that. And especially if the Strait of Hormuz opens and we start getting the flow of oil on the tankers that we need. So I think that we're in a better place than we were a couple, 3 weeks ago, obviously. I think that, instead of looking to sell, I think you really have to put a list together of stocks you want to own. And I think, and personally, it's going to be the large growth stocks that pull us out of this once again. So, be ready to buy. Keep your cash on hand right now. We're going into a long weekend, so anything can happen.
That is true.
Anything can happen. So,
Yes, and the markets are closed tomorrow.
But and so, anything can happen over the weekend. You can walk in Monday, we can be down 1,000 points. So again, I'm not saying go out today and buy, but, keep your list together of what you want to own if we do see a little more of a pullback.
I think this conflict is going to go on a little bit longer than what they might be saying, because we're sending a lot of troops over there right now and more warships, and so they're not
ready.
doing that if they
ready.
think things are coming close to a resolution. And when they do open up the Strait of Hormuz at some point, the oil's not going to flow right away. Excuse me. They can't just turn on the spigot. They got to go load up all those ships and then get them out, and it takes weeks to get around to wherever they're going to deliver those. So I'm not so sure the oil's going to come down that quickly.
Well, it's also the psychological impact of once the strait opens. What are the oil traders going to do? And they're going to forecast that that price is going to come down very aggressively. So, the ships may not be loaded with oil, but the traders, the market may be saying that you're going to see a big decline in prices back down to the 70, maybe 75.
We can hope.
So I was looking at the Fear and Greed Index,
I was just
and
gonna
so
mention that.
yes, so as of today, this morning, and it could change any minute. As of this morning, we were at 13, extreme fear.
Wow.
Whereas last week we were at 19, and like I started off earlier, I was looking at the numbers from last week to this week, and there wasn't, at the end of the day, that much change over the last week from
Really? So
some
it
of
was
the
right around the mid-teens area?
Well, what we were down, not much difference with where we're at with some of the market
I got you.
indices that we
Okay.
follow. So from last week to this week, and so I was a little surprised that the fear monitor was a lot lower than last week considering the markets really hadn't moved too much, but I think it's because of the volatility and the fluctuations we've seen pretty aggressively these last few days.
What news are hit the media recently?
And so another thing I wanted to bring up was over time we do have conversations regarding required minimum distributions. And kind of the question that gets brought up is, should I take my required minimum distribution early in the year or wait till the end of the year? And while it is important you take it, it really also depends on your cash flow needs and when you should take that money. And so we usually get the values as of December 31st of the prior year. And then we do have a lot of clients that take it at the beginning of the year or the first quarter because they also use that money for cash flow or for expenses and want to make sure it's satisfied. But occasionally we do have some clients that want to wait till the end of the year because they want to keep it in the tax deferral growth, and then they pull it out before the end of the year. Our team here is really good about making sure we get our letters out and make sure between September, October we notify our clients that haven't taken it, and by the end of the year we definitely make sure that's handled. But those that want to wait, the other thing you could do is if you did move the money out before the end of the year and you wanted to reinvest the money, you can still reinvest the money and put it to work. And then there's also sometimes the question of, well, should I take a little bit out over time? And which you can. The only thing with that is if something happens to you, unfortunately, then you just have to make sure your beneficiary, whether it be spouse or a non-spousal beneficiary, has to make sure that you satisfied your required minimum distribution for the year. So there's a little more numbers in evaluating. So usually we typically tend to see more of lump sum either the beginning or the end of the year, and happy to have that conversation with you to look at your specific situation. But we definitely, if you're a client of ours, we'll work with you, make sure that you're taken care of. But those are definitely some conversations that come up.
And so just to tag on to that, one of the things we do also see is that people who want to do qualified charitable distributions, if you've already taken your full required minimum out and you've had it in your own bank account, then you can't do the qualified charitable distribution after that if you've already satisfied it. So you need to be careful if that's something that you want to do, which is if you're over 70 and a half, you can take money out of your IRA and send it directly to charities, and then that amount is not considered taxable income.
I thought they got away with that, where you had to take the qualified charitable distribution
But if you've already satisfied your RMD or the required minimum, so let's just say your required minimum is, I don't know, $20,000, and you take all of that and then you send another $5,000 on top of that, that $5,000 isn't taxable to you, but the 20 is, because that was your required minimum and you already took it. So let's say your required minimum is 20 and you take 10 and you pull that, and then you take the other 10, you send it to the charity. That's fine.
That's fine. Yeah. Okay. Yep.
So I think
just a little planning.
Yeah. So I think we covered a lot of ground, and just want to share a WWM headline that took place this last week. So we want to share that Steve did retire on March 31st after 40 years in the financial services industry. I had the honor of working with him 22 of the 27 years I've been in business, and he has been an amazing business partner, mentor, friend. We will miss him, his humor. He's brought a lot of joy to us over the years. Yes, his perspective, but he's still around. He'll be around. We actually already got a photo, and happy to see him smiling and enjoying this next phase.
I thought for sure he was going to show up yesterday.
Yeah, I said
Nope.
Not retired.
That's right.
So needless to say, we will miss him. Yes. We're here to support our clients as a team, and happy to answer any questions along the way. But just know that we're excited for him. We are here to continue the relationships with all of you. And if you have any questions, let us know. Otherwise, I know we covered a lot today, and once again, we're closed tomorrow. That's April 3rd, and then we'll be back next week, and enjoy the long weekend. And thanks for joining us.
Happy Easter.
Yes.
Happy
Well,
investing.
I can only say one thing. Be greedy when people are fearful, and fearful when people are greedy. That was Warren Buffett.
Warren Buffett.
There you go.
There you go. I'll leave you with that.
Thank you.
Thank you.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.